What are the pros and cons of having alternative investments in a 401k? It, last week it was proposed there's going to be an executive order to include crypto, gl- commodities like gold, and then private assets as available investments for 401ks.
So private assets being private equity. Yeah.
Private equity, private credit, hedge funds. So
Private credit too. Oh,
yeah,
interesting.
so
Hedge funds. Wow.
yeah, so these are kind of what's on the table.
Yeah.
It's still just a proposed thing, so we don't really know the nuts and bolts.
Well, one thing that's interesting, generally speaking, in the regulations within, the investment world, a lot of those things you have to be a qualified investor to put
Hmm.
money into, and so they have different, rules about what that means. Certain amount of cash, certain amount of assets overall, certain amount of experience.
Yeah,
So they don't want, the average person. So what they're saying here is that they're going to let the average person play around with some of these, particularly,
yeah.
assets and such.
Always be up to the sponsors of the 401k to
Yeah.
to decide what these will be. But there's some pros and cons because you'll have always it'll have more assets means more diversification.
Yeah, exactly. So,
But
uh,
is the complexity worth the?
yeah, I tend to be a bit more conservative when I'm looking at things. And so whether it's available or not, so theoretically, a lot of people probably don't know this, but your 401k at a lot of the companies that we've been dealing with, they also have another option called your brokered 401k, brokerage
Yeah.
401k.
And so if you wanted to get exposure to gold or like your cryptocurrency funds,
Yeah.
you would have options by doing a kind of
Yeah, because
self-directed broker.
normally there's a restricted list,
Yeah.
right? So when you go to the brokered 401k, you're at like Schwab, you can do anything, or Fidelity, or whoever it is. You can buy anything that's available. And so right now you can buy an ETF, that has Bitcoin in it through iShares, IBIT, I think it's called.
Yeah.
And then you've got, GLD, which is another, ETF. They buy physical gold and store it,
Hmm.
for the shares and such too. So that's already available. What is new now is this, private equity, private credit, hedge funds. And so those are different. So, let's look at the pros and cons. So obviously more asset classes means more diversification. No,
Yeah.
no doubt about it, right? It may favor the wealthy when there might be a slow rollout that's coming as far as that goes. Returns, potential for higher returns, but obviously, you have more, risk
Yeah.
with those assets. That's why they're not in there now.
Yeah, you've seen crypto, the volatility of crypto, and so having that as a portion of it
Yeah.
could, it could juice your returns, but
Right.
it could also sap them too at the same time.
Yeah. And the fees are going to be higher. There's no doubt about that. I mean, so you have to have something that does really well to overcome those fees. I
Hmm.
mean, and so that fees have always been an issue that hang out there that doesn't get talked about enough. It can really, if you're normally paying 0.1% in that Vanguard, ETF that's on your approved list, and all of a sudden now you're paying 3% for some private credit or private equity or hedge fund.
Yeah, based on my understanding, what they want to do with the private equity, credit, and hedge funds is they make it into some sort of managed fund, and basically you buy that fund, and then that's how you get your exposure. Um,
That makes sense.
it we don't know the whole like how it's going to work, but the idea is that you wouldn't have an individual investor picking these managers or stuff like that
Yeah.
because they wouldn't have the ability to do it.
Yeah. So less disclosure, harder to evaluate, right? That's in generic concept of maybe not for some of that. I mean, you can buy the ETFs for for the, gold or for, Bitcoin or
But
whatever.
private equity
Right.
definitely has a
Right.
higher bar of, and then the information they release is not regulated as much, so it's harder to get good information.
Okay. So liquidity, this is my biggest point. I have never once purchased something that we couldn't get out of within 7 days. That comes from my grandfather. That was his thought. I managed to avoid the whole, limited partnership disaster that happened in the financial planning industry, even though they were trying to take you to dinner and they had all this money slushing around. And, they changed the tax law and just wiped those out. And we still have clients from practices that we've absorbed that have these limited partnerships and such that are still not liquid. And so I always worry about liquidity. Now, that wouldn't be true of that ETF with the Bitcoin or that ETF with the gold, or those are liquid. And it's more true with the private equity potentially,
Yeah,
right?
if the private equity has a lot of their money tied up in
Right.
private companies, it's hard to move those on a very rapid basis if there's a run on the investment in a sense.
Right. They probably just wouldn't allow it. I mean, that's the easiest way to do it. I've seen that before. Because they're going to go in, they're going to buy this company. Generally, let's say it's a 4-year deal. They want to
Mhm.
get out in 4 years, 5 years, whatever it might be. You might be in that investment for that period of time. Now, sometimes they can do what you said. They can put it in kind of a fund. And then what they do is they have essentially money left over in the money
Yeah,
market to accommodate kind of that average withdrawal. And that works out great. So there is, we give you quarterly liquidity or monthly liquidity so you can pull money out. And so, they manage the little cash fund that way. That's how they handle these and make it look more liquid. But then things fall apart. Too many people want their money out, and they only have, it's kind of like a bank. Bank only has 2 to 5% of their
yeah,
available deposits on hand at any time. They really can't go out there, and so that's where you get sort of that run on the bank, right? And the
yeah,
same thing can happen in any illiquid investment. It's why real estate has a problem sometimes too. I think that the one asset that I have purchased that I can't liquidate in 7 days, in the most cases, my own home, right?
yeah.
But that's a good exception.
Usually, you think of a home as more of a place to live and
Yeah,
shelter rather
that's right.
than
It
an
has some
investment.
alternate uses. So, so diversification, right? So we talked about that potentially reduces, public market risk just because it's different asset class, I like Bitcoin, it seems to follow the market pretty well. I think it's just more aggressive version of the market has a
Yeah,
higher beta.
it's a currency that kind of performs like a stock, I would
Yeah,
say. As
yeah.
long as there's faith in it, it'll go up. If it'll be stable or some a value there, and then as the market goes up, it can go up with it.
Gold has shown a diversification in general, but if you look closely at the very stressful times, gold's gone down too, and so it hasn't been a great diversification in some of those situations. So we'll see how that plays out. But suitability, so the more sophisticated investor, this is going to be a boon for them to get access to this, but may not be appropriate for everybody.
Yeah, just to become a accredited investor, you have to have $100,000 of.
Right.
There's so many hoops to jump through, and there's a lot of things you have to do to just become suitable for these more
I'm ass-
alternative
and
investments.
I'm assuming those are going to be waived inside these 401ks.
I assume there has to be some way to make it easier to
Yeah.
get around those
Right.
regulations. Otherwise, it'd just be too strenuous.
And I think that's one of the things that'll be interesting to see how it plays out because they have those rules in place to restrict,
It
the access to these.
it
Right,
protects the average investor
right,
because a lot of these are more liquid. They
right,
also have more uncertainty with them,
right.
more volatility.
So they're going to allow those people into these investments more
Yes,
more than they used to with
that's
this
why I think the
avenue.
managed funds kind of is a way to compensate to
Yeah.
have a professional investor, kind of manage the money in a sense.
Well, and also one nice thing is it's in a 401k. 401ks do tend to be longer term assets for our clients, They don't look at them as a in and out thing all the time. They may move around within that 401k, but a lot of times, you don't even have to withdraw it until you're 73 years old. So, and that will be interesting actually, and how this plays out, these illiquid pieces and how they might impact that requirement of distribution for those older people that would like to do this. But for the most part, I think we're looking at people that are still working, that'll be adding money to their 401ks. And so I think that's probably okay. I don't have a huge problem with this. The more options, the better. But, it just means that there's more complexity and more,
There's more ways that you can do something improperly. I
rest.
think for the average investor, keeping it simple is always kind of you know, if you invest in the S&P 500 and in bonds, you tend to be okay. It's
Yeah.
just say if you do the savings, that's what gets you 80% of the.
All you need to do is look at the list of approved investments and how small it is within
Yeah.
these 401ks, which for somebody like a professional like me is frustrating. I'd rather go to this brokerage 401k because I know what I'm doing. But I don't know what the percentage is, but I bet you it's 70+% of the people buy the target date fund,
That really works for
Right,
them.
right. And
And
that's
And one thing that's interesting also too is a lot of times these private investments, you have capital gains as your tax rate, and this will be just ordinary income, so it could be a little bit more tax expensive even if you juice your returns in a sense.
I wonder if that target date funds could incorporate some slices of some of these alternative investments.
Like pension funds kind of do.
Yeah, exactly right. Because then it's still liquid. Most of it's still in stocks and bonds and other things, and you only have that 2, 3, 4, 5% or
Yeah,
whatever in some of
especially if
these
your
alt.
funds are big enough, like
Right.
because like the California pension fund has like private equity as
Yeah,
part of
that's
their
right. Yep.
investment,
Yep.
but because it's such a large pension fund,
Right.
it has exposure to so many different things that it's not very much illiquid.
Right. Yeah. Unfortunately, a lot of those are Vanguard, and they're really conservative. I would be surprised to see them jump into the putting private equity into the target date 2045 would surprise me, but you never know.
Yeah.
So, okay, good. That's a great question.